This is a users group meeting, so it's going to be very informal. If you all have any questions, just let me know. I've been in the secure lending business since 1979, and thanks to Carol Ursel, we started using the Benford curve in 2000. She mentioned it, and then I went on to do an audit, and it was a big fraud, and the Benford curve worked perfectly.
Hey, if you're doing a code meeting and there's actually people on it, you may want to be closer to your microphone.
Okay. I think there are a few. So, and I'm going to try to give you some examples, real-world examples we've used. Well, let's see. Sorry for the technical difficulties. I don't know, what do you think?
So where's your presentation?
That's right here, usually. Oh, there we go. We view the use of the Benford curve tool in the context of general data mining and general just audit analysis, and we use it in combination with other techniques. Did any of you sit in on the initial Benford curve presentation in October of last year? So this is okay. So I'll go through all the slides. We've actually had good results with this. A part of what we do is lending, secure lending, and part is factoring. So with the factoring side, we get large volumes. We may buy in billions of dollars worth of receivables a year, and we receive them in the form of batch files. So through IDEA, we will run those batches through the IDEA and look at the curve and see if anything jumps out. And if anything jumps out, then we'll do some substantive testing. I think there's a general myth that auditors, we can't do a better job of detecting fraud, but with these tools, it really has helped. I guess one thing about the Benford curve, and it's something I'm going to talk about, establishing a baseline. It's really made us think more deeply about analyzing information in an electronic format. We think in terms of big data. In fact, we're trying to do a big data project at CIT, but that's still in the early stages. Well, basically, has anyone heard of the Benford curve yet? Or okay. So it was an engineer, and I guess a GE engineer in the 1920s, and they used the old log tables, and he noticed some of them were more worn than others, and it kind of got him to thinking about this. And when we're doing our analysis, always select the number, for any number, select the first number reading from left to right. So, on the number 1, 2, 3, 4, 5, we would be selecting the number 1. And obviously, the first number can never be 0. One big thing, and there's a psychological component to it, when people invent numbers, we have a subconscious bias towards certain numbers. Mine could be 2, yours could be 3 or 9. I think initially people assume that the frequency of occurrence is going to be equal. So say 1 divided by 9, but it's actually it reflects a different pattern. The first number occurs on average at about 30.1%, and it declines smoothly to about 4.5%. So that's the basic distribution. So when we run the data through the Benford, these are the percentages we're comparing it to.
So that's what it should be. Naturally occurring with a certain population.
Exactly.
This is the normal distribution that you would typically see occurring. So this,
Yes,
so this is the Benford baseline.
That is a good way to put it, yes. It's the Benford baseline, and to really do a good job of detecting this, we need to drill down a little more and get into a little more of the nuanced view of it. But this is basically, so when you see your data, and you're comparing, this is the baseline, exactly. And when you're comparing your data, there's usually an upper and a minimum. It's going to be relative to this number. But then there's a slightly better way to do it, and I'll get into that in a second. So that's the way it looks. It's a curve with a negative slope, and the numbers 1 through 9, and that's the frequency of occurrence. Needless to say, I'm not going to get in too much into the theory. I took a lot of math in school, but mathematicians have debated, is this something, a naturally occurring phenomenon in nature, or is this a result of our numbering system? And also, it's a result of, to some extent, of human psychology, in that when we invent numbers, we tend to have a subconscious bias. So, and I didn't want to get too deep into this, but when Benford spent a lot of time doing analysis on different databases, different data sets. So the first is atomic weight. If you look, it's 47.2%. And so if you look at the results from each type of data, the curve would be slightly different. So Reader's Digest, you see 47% versus the standard Benford of, what is it, 30.1. And we have a suggestion. So just so you don't think that all data in nature conform exactly to that Benford curve.
So what would be a Reader's Digest? What does that mean?
I know about atomic weight baseball statistics. I'd have to look. I can't recall exactly, but these were some of the data sets that Benford used.
So these are just random data sets. So the baseball one are just in general baseball statistics.
Exactly. He was just trying to say, picking many populations of random data, is this phenomena, does this apply to all of them? And so the answer would be yes, insofar as what you're doing is you're graphing a curve with a certain slope, negative slope. But if you want to be very nuanced, it's not going to be every data set that you analyze. It's not going to be 30. Exactly. And it's very careful, I'm sure all of you know this, but when you're selecting the data to analyze, it can't be invoice numbers. There can't be any arbitrary upper and lower numbers. Like on invoice numbers, it would be distorted, because usually when invoice numbers get to a certain point, it stops and repeats, or often does. The numbers have to measure something, a quantity, inventory quantity, accounts receivable value, inventory value. I know a lot of people use it for payables value, purchases. So the number has to represent something. Part of the big data, and it's something people talk about a lot today, and we're starting to look at it for marketing purposes. When you're analyzing large data sets and looking for relationships within the data, you're often going to find a lot of non-intuitive relationships. So if we look at just the raw data and we try to analyze it just visually, odds are we're not going to see all the relationships. So when we start to drill down and use tools like IDEA in combination with other tools we use within IDEA, and I'd like to emphasize, in our view, the Benford curve, while it's very, very useful, it has to be used in combination with all the other things you can do within IDEA. And I'll show you some examples. This has to do with expense reports. Sometimes numbers do cluster within a certain range, like expense reports.
Well, back up. That's not something that's not something to be ignored, right? I
Oh, no.
Yeah.
Yes. Oh, no, you're 100%, yes.
Okay.
Yes.
Okay.
We usually don't do expense reports, but yes, if you're doing internal audit or payables, yes, that absolutely yes.
Yeah, okay, sorry.
No, please. So that's right. So basically, in your situation, within, and I'll show you an example, suddenly you get a clustering anomaly, clustering of a higher percentage of twos that occur. Then within IDEA, do you all know how to do the extract subsets within IDEA? It's pretty easy. Okay, well, I'll show you some examples. This is a real data set. We've changed the names. This is real data. ABC company, 20,000 records. Twos and threes were overrepresented. Our first thought isn't that there's fraud, but that there's something unique within that company or their business practices. And as it turns out, in this particular case, there was a disproportionate of invoices in the 20 to 29 and 31 to 39% range. Let's see. Oh yeah, this is amazing. We found out about the Benford curve. I did in 2000. Thanks to Carol Ursel. I don't know if you know her, but she's an excellent trainer. She's been with automation a long time. She mentioned it to me. I wrote it down. At that time, the Benford curve wasn't part of the IDEA functionalities, so we tried it out in Excel, which is kind of cumbersome. This company, it was a company in Houston, and I know it's hard to believe. It wasn't an audited financial statement, but it was a reviewed financial statement by a fairly well-known accounting firm in Houston. And on paper, it was about $210 million in net sales and I think $1.5 million profit. So if you just look at it, all the numbers looked pretty good. Turned out to be a big fraud. Again, hard to believe. And this is a good exception where, like when we're running a lot of our batches through IDEA, this is one example where it can jump off the table. So instead of a curve with a negative slope, you get a triangle. Again, hard to believe, but this guy was using, he used an inordinate number of round numbers, which is obviously he didn't know a lot about auditing, and they all started with either twos or threes. Again, hard to believe, but if you, over a course of your audit lifetime, you're going to, every so often, you'll run into some distortion like that. And in my mind, this is an example of how his psychology, his subconscious biases toward, and this obviously twos and threes, gave us a heads up. So truth, I always think of the truth as stranger than fiction. I guess conceptually, one of the things is when we're, in the old days when we worked with large reports, you know, it's like very thick reports. When I started out, if someone wanted to pull the wool over our eyes, it was relatively easy to do. Now, if they give me that same information electronically with IDEA using the Benford curve, then we're probably going to notice some patterns. Typically, we do, what I'm looking at is accounts receivable, inventory, disbursements, accounts payable, things like that. I get the impression very often people in some of these groups, their emphasis is on accounts payable, but it really works on any data set. Basically, you know, we're grouping it under digital analysis. For us, the first thing we do is once we import the data set, we run it through, we compare it to the Benford curve. And so it takes seconds. And you can create scripts. Have you ever used scripts within IDEA? It's pretty easy to do. There's two ways now. You know, it's like a macro. So you can do it a more complicated way, and you know, type in the code, and you can do another way. It's very, very, very simple. It'll just as you you set it up, and I can show you an example later. But you just it'll memorize your keystrokes, and it's amazing. very often we're trying to decide what clients to, there is a pattern. So if we do initial analysis before we go out in the field, it increases the likelihood of us catching fraud, or we can make a decision, should we spend more time in company A, B, or C, and the Benford curve can really help us with that. Here's one very important suggestion, and it goes to, if anything, I think, in my opinion, it's one of the most important things. If you noticed before, in the different kinds of data sets, like on each of your companies, it's important to establish a baseline. I know it, like when FBI, when they interview people, they kind of talk to you and kind of get an idea of what you're normally like, and that's establishing a baseline. With data, we're also establishing a baseline. So what I would suggest is go back, either the last 4 quarters, or if you have the time, the last 12 months, and kind of get, and I'll show you a specific example in a few minutes, and just eventually you'll get an idea of how your particular data sets are graphing, and then if anything changes materially, it's going to jump off the page, and that's what we've used, and it works really well. So instead of just saying, this is the Benford curve, this is the probability distribution, that's a starting point, but then also very important is try to establish a baseline for your unique data sets. I don't know if you have the time in your audits, but it would be very useful. It really works for us. Here, another thing, it's very important to spend time analyzing subsets. So, as an example, if the number 2 or 3 is overrepresented, by definition, mathematically, some other ones will be underrepresented. So with an idea, do an extraction, and there's different ways to do an extraction. And then spend a lot of time analyzing, let's say, that specific subset, like the number 5, or in that earlier example, number 2 and number 3. I mentioned Dr. Negrini, and we know him, and he spent some time 10 years ago doing a little training for us. He's a professor, he's a mathematician, and one thing that's important is the size of your data set. So he's suggesting to get a reasonable number, the data set should be at least 1,000 records. And when it's 300 to 1,000 records, it gets a little iffy, so just be careful with that. But in the case of that big fraud, I think there were actually less than 1,000 invoices in his detailed aging, so it can still work. Here's just some basically how you import it. I don't know. I think some people are listening in online, but it's really to import it. You just import the aging, open the analysis tab, select Benford's law, choose the field to analyze. Make sure. Usually we use like the balance. It could be quantity field on inventory, or it could be quantity purchased, or we have good luck with the extended value, where there's quantity times cost, or sales value. And then what we do is we print it as a PDF file, and we just retain those for the subsequent audits. And let me see if I can, hopefully, okay, good. See, this is the Benford curve. This is actual data, raw data. And one of the things we do, once you have enough practice, it just takes a few seconds. One of the things I look for is when I bring it in, like if you're doing year end to year end, or month to month, if nothing's changed materially within the company, like sales levels, inventory purchases, the number of records should be about the same. So in both of these data sets, and this is actual data, the data the number of records was the same from month to month. This one closed, you know, it tracks pretty closely. This is actually an inventory file. And for what it's worth, statistically, for us anyway, the inventory values track more closely than receivable values. And then the following month, we get this distribution. So you'll notice the 9 is overrepresented.
Is this a price per unit?
This would be, yes, really cost, it's really an extended cost. So you have 100 units times, you know, $1 a unit. So it's an extended value of inventory.
For a group of something.
Yes, sir.
Whatever. All right.
In this case, you know, we do a lot of manufacturing companies, wholesalers, distributors. This company is actually, they import cold weather clothing. So, but the most important thing is, you know, just from month to month, this, in my mind, it really, comparing the two, it really jumped off the page because of, and it's basically an honest client. And, you know, we look at probabilities of them committing fraud based on, are they losing money, is dilution going up, anything unusual. So with this table, what we do, see if I can hopefully, if I can pull it out. There we go. Turned out there was an error, inadvertent error, and somehow some numbers got duplicated. So instead of, so I think the perpetual increased by maybe 2 million for that month. So, and since we lend against this, we have to be careful. So we did that just through, if I can do this. I just use a direct extraction. So if you look at extended cost, that's just extended values greater than 0, and extended cost, that percentage sign is called a MOD. It's basically, if you just put in the field name, the percentage sign, or MOD, you'll see it on your, you'll see it right here, MOD, 1,000 equals 0. It'll pick out anything with any round number, so it just takes seconds. There's other ways to do it, but that's a, so basically, usually, obviously, probably preaching to the crowd, but to the, you know, if you have round numbers, it's typically a sign of estimation. So this is an example of how just a few seconds of work highlighted a problem which we probably couldn't have detected otherwise. Any questions so far? Or
Do you do mostly a one-digit test like that, or do you go to the 2 and 3?
Well, I've had a lot of luck with the 2 and 3, and I know Dr. Negrini spent a lot of time also looking at, for certain things like in the payables area, the probability distribution of cents, like how often 0 occurs. So it's something you can look into. I haven't spent a lot of time on that, but
the cents you said?
Yes, sir, correct, the cents. And that's very key, like in looking for disbursements. If you have the most likely distribution of, if you see a lot of 000, you know, 00, if it's distorted, then it's something you should dig into.
So, what's my question? How does it do that then? I guess I didn't realize Benford did include zeros too.
You can.
Take out an error, or how does that work?
You can actually, there's a couple of ways. One you can do, I would do a right, you know, like you can just extract the right 2 digits, the decimals.
Right, no, I get that. What I'm saying is that Benford doesn't typically read a 0 as a digit, right?
Correct.
So what does it do? Does it kick it as an error if it's a double 0?
I'm going to have to check on that. It's not something, but it's
that's a good thought.
Well, you know, this is a users group. I was kind of hoping maybe if some of you come up with some unique or different way of doing it, you can share it with us at the next.
Okay. Oh, okay.
So that's a very good, yeah, that's a very good.
It almost has to be, does it stay in the merit field then?
Pardon?
Does it stay in the merit field then? Because if you carve out, like let's say you use the right function, you carve out the center from the right, the zeros all of a sudden, since it's a numeric field, it becomes blank.
So to say that again, so if I have,
So if I have a field or a text field,
I'm starting.
that's what I'm saying. That Benford has to be a numeric field, right? And so clip out the sense of it.
Well,
Does it
but yeah,
is it double zero? Does it
well,
take that shit in the field? Because it's a numeric field, it sees zero, and so it becomes blank.
well, that's a good question. One way to approach it would be, let's say you have a data set of 100 records. You could say, you could look at what percentage, you could say, we could calculate a percentage where the, but all we're doing is creating a curve. We're graphing the data. So, it's easy to figure out. You can do an if routine where you can determine how frequently in this population the zero is occurring. Could be if it's 20 or 40%, and just compare that to.
I wonder if it would just kick out as an error.
Well,
You got the errors and then you got everything else. Because that's good enough, really, to be honest with you. I mean, if you get a bunch of blank fields, that's your double zeros, that's okay. I mean, I just pull those out and examine those
right.
separately. I don't know, anyway.
But that's probably something we need to spend a little.
I like the test. It's a good thought.
No, that's good. It's probably something we need to spend a little more time looking into the. It's basically just, again, if something's over, sometimes with some data sets, and we do a lot of substantive testing, if something's, just because it's a little higher or lower than the expected Benford curve, we don't panic. We had a Benford curve, we had a presentation in October, and I think there were 300 attendees online, a GoToMeeting, and we were able to answer some questions we didn't have time for. This was one of the questions. They noted an observation that the digit 5, 6 almost always is not in line with a Benford. So does this mean the Benford is not reliable? And I think it goes back to establishing a baseline. So it is a very useful gauge, particularly when you're using it in combination with other things, and especially when you create a baseline for your data sets. So let's see. Yes, like in the case of that fraud, that's the theory from Dr. Negrini, and from our experience, the ones tend to be significantly underrepresented. So in the case of the fraud, the frequency of occurrence of 1 was 0. So I was going to just harp on one thing: is please establish a baseline for your data. Payroll frauds. It's not something we spend a lot of time in, but we do look at that. We usually compare prior year to current year to see if there's been any new vendors, or we had one fraud where we did a join, employees from last year versus this year, and we noticed there were some new, actually there were new contractors, and they were being paid in round numbers again. And this company was about a $60 million a year company in a small town. Hard to believe, but they had a controller, and she was reconciling cash. She was interfacing with ADP, and she created a couple of bogus accounts. So we had a talk with the president. We said it's a good idea for someone else to reconcile cash, but that's basic auditing. I don't know if the Benford per se, but some of the tests we use, an idea of joining a prior year to current year, you can include everything from prior year with anything from the current year, and then you can see if there's any new vendors or customers. So we do that for disbursements journals, payroll registers. So it's not something we normally do. We look at it if we spend some time if we see something unusual. I know internal auditors and forensic auditors spend a lot of time in that area. We typically have a week to do it unless there's a problem. We tend to look at kind of probabilistic based on everything that we see. Should we spend extra time in some areas? And it tends to work very well. Yeah, the @MOD. I mean, that's a very, very useful. It just takes seconds. We found that very, very useful. So if you have, we work with data sets where you could have, 10,000, 100,000, sometimes 500,000 records. 500,000 records. So using MOD to extract round numbers is very useful. This was another question with regard to population size. If you're analyzing AP, should you do a separate Benford? First, we run the Benford on the AP subledger. It just takes a few seconds. If we see any abnormal patterns, then we'll do an extraction of the subsets, and we'll spend extra time analyzing those subsets. It sounds very simple, but it definitely works. Also, we do a join on a vendor-by-vendor basis. We always do current period versus last quarter or last year, see if there are any material changes, and we look at for purchase quantities, quantity purchase, dates purchase, new vendors. Also, it's very useful in IDEA, like if you're comparing unit costs, I'm veering a little off from the Benford curve, but once you have the data, we compare, let's say unit cost is $10. You can calculate an average cost or average sales price, so we're comparing average sales price to unit cost. So when it comes to cost testing, it's very useful. So if your cost is $10, but your average sales price is, say, $5 for a large percentage of those for the population, you should go back and look at your obsolescence reserves. So again, we tend to think of the Benford curve holistically with everything else we're doing within IDEA. Another question with the unit cost or with a transactional. We tend to do it on the extended value. We've had good luck with doing it on either the extended value or, let's say in the case of inventory, in the units sold, the actual quantity. And we do a lot of joins. So I mean, joining is a very useful thing we found, comparing prior year with current year. This question, how would you apply Benfords to other functions? The type of asset is really secondary. It's basically you're just graphing it and looking at the frequency of occurrence of certain numbers. So whether it's receivable, journal entries, I guess you could run the Benford on journal entries. We look for round numbers, offsetting numbers, sometimes we'll use an absolute value to see if to match the positive and negative journal entries. Again, it just takes a few minutes. People have brought up SAS 99, and that's how, as far as fraud testing for us, it's a normal part of our business since we lend on the assets of the company. So you probably know as much as I do about this, but in trying to determine before the engagement, before the audit, what to test, we look at a lot of things, just glance through the financial statements. Is reporting up to date? How's dilution, turnover, any major, if there's significant distortions in one area, it increases the probability so we can dig deeper and expand the scope. And again, you'll develop a sense. So if you can, just go back and do your, if you can dig up AR, AP, subledgers, disbursements journals over the last 12 months. Just run Benford's. You might find interesting things in it. And again, SAS 99 kept coming up because I know younger auditors, they're under pressure now to meet before the audit and determine is there going to be an unusually high likelihood of fraud in this engagement. So I would say use the Benford curve before that. Let's see. Goes back. So that's one of the most important examples, I guess, of how, let's see, of comparing current data to baseline data. So we've been talking about 45 minutes. Any thoughts or comments on how you all use it? Since this is a users group meeting, we're always learning. I mean, there's, on every audit we tend to learn a little more. Have you all used some of this so far? Yes,
let me ask you a question. I'll hijack real quick. So I'm not a huge user of Benford, because again, it can create a use check that's on speed. It's and I guess there's a conception out there, and I've always had it to a certain extent, that Benford can create a situation where you can find a lot of noise in it and then not really,
Yes.
It can, the triangle example, it's very much, you found what you were looking for. Other times, if everything's kind of following the line, then you start chasing things that may or may not be popular or just naturally occur in the data set. So
yes.
That's fair to say. My question for you is, because I'm not a heavy user of it, although I have used it in the past, for specific applications, what it sounds like, because you're so versed in it, and it's a big part of your day-to-day usage of IDEA and what have you. So I guess there's two questions. When it comes to IDEA, how often, out of your go-to tests and the things you're doing for the job that you currently hold, what percentage of the time are you using Benford? Is it
100%.
100% of the time.
So it takes seconds. Let's say once I bring an accounts payable or a purchase journal or inventory, first thing we do, run the Benford. I'll print it out in a PDF format, and then I'll compare it to the last audit or the last two audits. And as I showed you earlier, well, like this example where this is the actual, this is say December 31st, and then that's the data from January 31st, where the, if I can,
So, again, so you're using this data year over year. You've already done the procedures last year and the year before. Now you do it for the next year. And you're looking for anything that stands out, because obviously you've got trends. You understand how Benford looks for each one of these companies, right?
Right.
And so then after you do that, I guess, well, let me take a step back. Very first time, so you don't have, in my example for you, you don't have any historicals.
Okay.
And it's the first time you're using Benford, and it pops out looking normal. I mean, it follows a trend.
Right.
And if it does pop out, it pops out, and I mean, it's all much to do about nothing, right?
Right.
Something spikes, and it's the $25 thing because that's what my cell phone bill. That's my cell phone expense limit every month. I can just charge it $25 or whatever it is.
Right.
So you look, you see some variances, and no big deal. But I guess my question is I get concerned just back to budget. Meaning coming up to speed for the first time on various Benfords, there's an investment. Would you agree, or share with me your experience on the investment of Benfords when you don't, you do it and you don't really see anything, and the exceptions that you do see tend to be explained.
Right.
Okay. So I mean, I'm going to say sell me on Benfords, but basically say, hey, this is why Benfords is so good for what I'm doing. This is why it's my go-to.
Okay.
All that good stuff.
Very good question. Yeah, there's something I was going to ask you all about is and this kind of dovetails into that, the concept of crowdsourcing. Like, as an example, we have a help desk, which we started using IDEA in 2000, which is extremely helpful. And I don't know if you all heard about the StuckNet virus, that virus that destroyed some of the, some Iranian, reactors. It was the solution was crowdsourced. In other words, so all of us are experts in our area. I'm not really sure, so I ask for your opinion, and you give me part of the answer, and all of you give me part of the answer, and together. So I was just wondering if it's something for y'all to think about, if you think there would be a place for that within the automation website. So that's a user group to decide. So, and where I'm going with that, Kevin, is that if you ask me the question, I would say, first, what are you looking at? You'll say, well, I'm looking at inventory and receivables. So I'd say, okay, now once you get the data set in, just run the Benford, print it out, and it'll take literally, 60 seconds that's a lot, maybe 15 seconds. If it's an inventory, based on I'd say there's for inventory, there's empirical and subjective probability. Subjective being, from what I learned a long time ago, it's based on our experiences. So if your inventory, your curve should be pretty close to this. It should be pretty darn close to this. If it's receivables, you can have more latitude in the frequency of occurrence and how they compare to the Benford curve. So if you're saying, I'm getting a lot of distortion on inventory, I'd say, maybe get a report from last year or last quarter and compare it. Because just statistically, there's a high probability for inventory. You should get a pretty close approximation. For receivables, very often you get a much wider distribution. So if you say, oh, I'm a little off on receivables, and depending on the business, then my next question would be, is it retail? And sometimes are there internet sales? If they're internet sales, you'll tend to see, like Amazon, you'll tend to see a lot of small sales, 20, 30. So it's kind of, it would be, it's a drill down. So first, what are you running it on? And then if you get a distortion, then, drill down, is it AR inventory? Then what's the industry? So if you talk to people that have done it, and that's why it's so important to establish baselines for your,
right.
Yeah, it's just.
So, yeah, we have lots of different clients and lots of different places. So, next question. What do you find in the sense that you have your baselines, you've done a lot of your work, you have a lot, I guess the question is, if you want to keep people busy, let's say you have a big team of people, or just such as yourself, your role is, hey, I'm a Benford guy, and I'm going to do Benford across all the clients, and that's be my whole, let's call it my full-time job. And you have a very deep, good understanding of every Benford year over year over all the industries for each client. I mean, you own this thing, and you're all over it. The question is, how often does being the Benford guy and spending a lot of time doing Benfords on all of these different clients, how often, what percentage do you uncover something magic, something?
Okay. Well, I'd say as far as frauds, I'd say less than 5%.
Okay.
But as far as problems, errors, like, and we were talking about that before the meeting. Kevin, he's excellent. He used to program, and so he knows an unusual amount about databases and systems. But as far as finding problems like this one, where suddenly you have, errors in the system, where sometimes if they don't do an extraction properly, and that's another thing. Make sure that when you get the data file initially, have them compare like the value control total, and look at the number of records, and because very often, I'd say the probability of errors would be, if you look at, if I could see all your data sets, I'd say 10 to 20% of some sort of error. I mean, maybe it could be an error in the system, in the database. Very often people don't, very, very common, people don't audit the databases. It's very important, so you can end up with duplicate attributes, and you can have duplicate records like in this one. So that's in our country, I'm sure we're probably the best as far as sanitizing our data. Errors occur frequently. So using it for that purpose, if you're looking for errors as opposed to fraud, I'd say a high probability. I mean, at least 10%, at least. So, hope I'm answering your question. But yes, it's very useful.
Your question, I think what I'm hearing you say is, 5% of the time.
Or like payables. If you want to find problems, instead of going to receivables and inventory, go to payables. Very often, this involves, I guess, psychology too, but very often, and I'm generalizing here, please, very often there's a high, sometimes the pay rate isn't as high in certain payable departments, and the turnover can be very quick. So as a result, you get often more human error. And then as far as databases, and you probably know this better than I, but from what I've seen, people just don't do a good job of managing databases, or if you ask for data and they provide a file, I've had people do, even with very large files, like 250,000 records, people are obsessed with Excel, and they should use a database like,
well, they should
bring it in.
Raw, they should just like that.
Yes.
Scott, my question, in your work, what percentage of the time is Benford doing?
Well, you alluded to this a second ago, actually, what you all did was that since I have the data anyway, it's pretty easy to click the button.
Right.
Yeah, so the key is obviously in digging in. I think the biggest point that I've heard repeatedly is, and I think this is really strong, is the idea of comparing, you got the baseline, and so you're looking at the trends. A couple slides ago you said, for example, the fives tend to spike, out of the curve. I think a couple slides ago you said the number of the digit, the first digit 5 tends to violate Benford's more than other digits. It's actually specifically 50 that tends to spike because so many professional services are $5,000, $50,000, $500,000, and so that tends to cause, or $50, $500, that's in payables or in expense reports in particular, and so what's the point? The point is that creates a little bit of noise, and so I don't, but knowing that, I may look at it and see a spike if you hit the first two digits. You see a spike in 50 a whole lot.
You can do.
I'll tend to ignore that as noise, and not, know that that's false positive. Yeah.
But you see, that's a perfect example because you're familiar with the patterns in your particular data set, so you're right.
But the idea is that if you're doing what you're doing here, if you're doing it side by side, if you see an equal spike both years, then okay. And not that that's not a problem, I won't take a look at it, but exactly what your point, Kevin, is that, I'm going to go to the more hard-hitting tests, because we've only got so much time.
And time's the deal, and that's where I got back to just alluding, and just, if you're in a company and I'm just calling, just for example, I'm the Benford guy, meaning, hey, I work in internal audit, I have not an unlimited amount of hours, but I have a lot of hours to really dig in on my set of clients. Year-over-year, month-to-month, it's awesome. But in a professional services standpoint, budget truly is a factor, and if fraud's way out, then yeah, we're going to.
But the number one thing is to find fraud, right? I don't want to blow up, I don't want to say, well, I need to stick to budget and this is fraud. So there's that delicate balance there, right? And so, but that being said, I guess getting back to the answer to your original question is that since I have the data anyway, I tend to run it. Now, what I've never done is this right here. I've never looked at it side by side on the baseline.
Oh yes, it's really, yes.
Yeah, that's pretty powerful. Even if you go quarter to quarter, if you're running the past year, section it off by quarter.
So then let's talk about that because of the nature of how you use Benford's and the year-over-year. Let's just assume that the time frame you're typically doing is year-over-year. What is your by doing that, by looking year-over-year, how often does doing that, Benford to Benford, scream, hey, I gotta look at something.
Well, I'd say fairly high. I mean, it's, it could be.
It's quite helpful, meaning that Benford turns into a whole new animal when you see it year over year, because
Absolutely.
Because the things that were the spikes and the outliers, when you don't see them again, scream at you even
Absolutely.
more.
Well, that would be the other flip side of it is, yeah, if it, like for the example earlier, if it spiked last year and it's not spiking this year, what if we drop off?
Yeah.
And that's a good example. You're looking for changes on either,
So the next question, sorry to,
Oh, no, go ahead.
to jump on top of you. The next question then would be that, preferably on your point, if I'm a one-time Benford in the sense that I have a new client, even if you had a new client, would you say, you know what, I really want to see 2 years because it helps me use Benfords by a factor of, yeah. So in a sense, you're going to sit there and say, yeah, I'll use Benfords on a year's worth of data, but you know what, I prefer to use Benfords on 2 years worth of data. Would you highly stress that?
I would say it's absolutely a must, yeah. It goes back to even pre-electronic analysis, something very basic, you look at your aging spread this year versus aging spread last year, and how does that compare relative to, have sales increased, just very basic stuff.
Well, what's nice about that also is that, if you look at other tests with an idea, I like to use file compare quarter over quarter. So you look for, classic fraud goes like this, right? And so you're looking at an increasing trend in something. It could be inventory unit prices, which you mentioned. It could be, increasing spend on vendor. It could be someone pumping in more T&E quarter after quarter, a payroll goes, something. And if you have 2 years worth of data, that translates to 8 quarters, that you can compare and look for a nice sweeping upward curve.
That's a good point. Dana, maybe that's something, you see, when Carol first mentioned it to me in 2000, the Benford wasn't incorporated within IDEA. So we tried it out on the Excel, and it was kind of cumbersome, but now it makes it more easier. Maybe.
Version 9 here, Aaron?
Pardon?
Is this version 9?
Mine's version 9, yes.
Version 9.
Scott's going to try to talk about version 10 a little later today.
Did you turn off didn't agree to do like a red, yellow, green on Benford's?
You mean you want my PowerPoint?
No. Go back to the idea.
Okay.
The idea itself.
Uh-huh.
Yeah. I guess maybe it's the 2-digit, what they call that, where he does there's like he colors some of the bars, like red, like this one's red, look at this one. He risk-weighted bars, and I can't remember where that is. You can just click on a 2-digit on one of those charts. It's not going to mess you up.
Results of the first two digits?
Yeah.
Oh, no, it
Oh,
doesn't.
there it is. Yeah, okay. So he's coloring some of the bars, you see. The reds, yeah.
Oh, that's, okay, good point. Let's see. Oh. It's good. So,
Yeah, he just weighted it based on amounts, like if some of those 20s or whatever that is, what is that? 20? Okay. Half line. So there might be some really big numbers in that 20, like 20 million or something like that.
That's interesting. Because on this one, you have the max, the mean, and the min. So in this case, that was the erroneous file.
The one on the right?
One to your left, yeah. Yeah, that's the real data.
The one on the left has the fraud in it, or the one?
Well, let's call it just errors.
Oh, we'll call it errors, okay.
So, inadvertent. Yeah, just inadvertent.
Okay.
Yeah, this is the real data.
Okay.
I have a question on the real data on the right, when you went back to, if you go back to the single digit one.
Oh, the first digit, did you say?
Yeah. So in your test, if you see that result on the right, everything looks good, but most importantly, like, what are you digging into on the right? Anything or anything looks good, moving on?
Well, that just gives me an idea. No particular number jumps out. So normally, if it did jump out, I would extract the subset and then I pick my sample for substantive testing. And then from there, I look at more, like I picked round numbers, and then I look for any unusual characteristics, any unusual names. Are they using P.O. boxes or addresses? Just the usual.
Yeah.
But this is just a right, right. And it's usually associated, like if you go to the doctor and if one of your numbers is way spiked, there's something really wrong. Yeah. So it's like, that's kind of how I view it. But that's a good idea. Maybe what Scott mentioned, and Dana, maybe you could, Dana? Well, maybe automation could incorporate, that's a good idea, real data, the current Benford, and then a composite score from prior. That would be useful. Like the superimpose, you have the three curves. So it's useful though. I mean, when you view it, the more we use it, it's the concept of the Benford, the frequency of occurrence is important, but also comparing it to our earlier data sets. It's really about just graphing numbers. Anybody else use it for any other reason? Yes, ma'am.
Well, I want to use that again. So if there were any outliers, how would you extract that set of outliers?
Okay. Well, what I would do, let's say like on this one, okay, here's the graph. It turns out here are the round numbers. What I would do, well, first, let me see, go back. Say like this one, suddenly in comparing the two, you notice the 9's overrepresented. So if the 9's overrepresented, something by definition is underrepresented. So what you would do is you test what's overrepresented. So what I typically do is I just double click and I do display records. So it gives me this. And then I do this extended cost as quantity times cost. I say, whoa, a lot of round numbers. Something's wrong. And so you can either save it like this, or I did just go to the data set, and I used I'm trying to exclude any extended values with 0, so it'll make your population smaller. Excuse me. So extended cost and, have you ever used that? You can use and or. Then extended cost, then mod, it's this one. So anytime you see, say, the name of the attribute, the name of the field, mod, and it'll put down a percentage sign. Then you'll put the name, 1,000, could be 100, but 1,000 equals 0. So it's going to pull out round numbers. So that's how I do it. So it's just very unusual for them to be all these round numbers. Then we do substantive testing. Let's see the source documents, and that's where it comes up. Oops, we made a mistake. So have you all used it for any other? Sounds like you use it quite a bit, or use something.
I don't know that I use it quite a bit. I've been using it for a long time. So just over a number of years, the quantity has accumulated. I probably saw the Green talk about this for the first time maybe in 2000, and it was like you said, it actually was worth it, an idea at the time. Because when I saw him do this presentation, it was an idea user group back at Travis Wolf back in the day, and this was 15 years ago. And when I heard the Green talk about this, I said, this is the dumbest thing I've ever heard. And when he's presenting this chart and all this kind of stuff, and so when you hear something like that, you think that, what do? You assign staff to the project, right? So I assigned one of my staff, and I said, pull our payables file and see, and I was running an audit shop at the time, and so it was pretty easy for us to get the data we needed. I said, we run this and see if this is, if this is anything at all. And so about a week later, he came back, and we were in a conference room and he presented it to us, and man, if it didn't just fall beautifully.
Really?
Okay. So I'm like, all right, well, I guess this is something, and so it kind of led us to a couple issues over time, and one of them being, what I mentioned earlier, is that we did it on expense reports and saw the spike at the $24,
Yes.
getting $24 tax you need a receipt. Now, you could have done that with a simple stratification, you didn't need Benford's for that, but we found it with Benford's, and so it worked, you know, and so it's, you know, for stuff like that, you know, yes, it can be found another way, but we still found it with Benford's.
Right.
Because, you know, you see that big blue line, you know, go way over the, way over the curve, and that's, look, I mean, however I find it, doesn't matter to me, that's just fine. And so, expense reports actually tends to be pretty poor Benford test because such a high percentage of your expenses are meals, and so the 10, 11, 12, 13, 14, $15, tips, all that stuff spikes the, you know, early in the curve. But the point is that we still saw that $24 spike. And, you know, or in another client last year, we found a $74 spike. Same principle. You know, the IRS receipt rule is $75. And so, you know, when you see, you know, the $25 thing is actually typically a company rule. You know, for tax purposes, it's actually 75. You know, so you see that spike at 74. Same thing.
Well, that's a good point. I think, in my mind, it kind of dovetails with big data. Like in big data, when you're analyzing big data, like Google, I'm sure Google is data mining all our stuff. A lot of, and that's the key thing, a lot of relationships are counterintuitive. Like most people think, well, the frequency of occurrence is probably going to be, you know, 1 divided by 9, 11.1%. But it's really not that way at all. So it's counterintuitive. So your initial conclusion was reasonable. When I first heard about it, I thought, could this possibly be?
It's counterintuitive, but if you look at, it's, you know, based on the fact where it's a log 10, the American system never run. And when you think about it from a PhD standpoint, it does make sense that you're going to cross a threshold of 10, 100,000, 10,000, you know, more often than.
Yes. So it's definitely useful. Scott, when you, I mean, Kevin, excuse me. You know, what do you think? Maybe they could incorporate automation. You know, we could have 3 curves: the basic Benford, our current data, and then a composite data. I mean, maybe that's something we could do. But yeah, I mean, if you're thinking of using it, I'd say it just takes seconds. So it's not going to, fraud is probably going to be a smaller percentage, but as far as database errors, if you're getting all your data electronically, then I think it's not infrequent. It's fairly frequent that people make mistakes. A lot of it is human error. Maybe they're copying and pasting or extracting it improperly, or or maybe even the database hasn't been audited. I'm sure I don't know if you found that in the old, when you were working with databases, but.
It's, I mean, back when you're alluding to this, data can get corrupted as it's wrong, which, yeah, you know, if you get data 9 different ways, then it can come out. You know, I mean, so, yeah, I mean, that can always happen. But the other, you know, I think it's like anything else. We were talking earlier about people that have bad books. You know, there's people, there's companies that have bad bookkeepers, and then they get better bookkeepers. Data gets fixed and there's weird things going on. But I mean, the same thing goes in with information and data and capturing that information. Is how large is your organization? Do they have time to spend cleaning the data? And what I mean by that is that entering transactions isn't fun. And because entering transactions is not fun, it's rife with problems if controls aren't put on the front end of various systems. Sure that the weird things don't happen, and you know that in turn can create situations where you know there's bad data garbage in your system, which we always see. We can tend to see. You see it less in financial systems, but you know, because it's heavily reported on. You know, every aspect of a financial system is heavily reported on quite often. But back what you're saying, hey, I'm looking at various things and I found a data problem, and then I can go back and tell them, hey, it turned out not to be anything, but you got an issue here where it's, I can see a lot of benefit of that in the internal audit realm when you have a lot of time and energy to really dig down versus on some of the stuff that we're doing, you know, we're having the 1 hour SAS 99 conversation, talk about where we're going to find stuff. We're going to run a handful of tests and look at a handful of areas, what are screaming at us. And obviously, Benford is a very good tool for that, but I only made one comment, which is the same comment that gets made. Every test or every procedure can get a bad rap for whatever reason. And me, oh, well, you're never going to find anything in this or this, that, or hey, doing this procedure can create more work because it can. If we're going to try to do expense reports for this, it's going to find things we already know about. But I mean, I think we all agree that any test and then digging in on that test is a good thing because you learn new things about various fields. I would just say that I haven't found myself doing Benfords as much, and definitely here today to be sold on, man, you should be doing this 24/7. And that's really why I'm here. I want to hear that.
Well, let's say you're testing revenue companies, 100 million in sales. Instead of relying on summary information, I always insist on, and they can do it easily. It's one of the most basic types of data. You've sold X units on X date, there's a certain assigned invoice number to a certain customer at a certain value. So if their sales are revenue 100 million, their raw data, and that's another thing, it's really hard to fake that. They can try, but then you'll end up with a graph like that one. Get the raw data. There's going to be some reconciliations, but the extended value of the sales data should closely approximate the revenue on their P&L. It should. And once you get the data, you can do a Benford. You can do a lower cost of market. I mean, you can create an average sales price. You can look at gross margins. I mean, so I always insist on the sales data because we do other tests, but so if they're saying, yes, we have 100 million and they're faking it, it's going to be really hard to produce that. They can't wait 2 weeks, so they should be able to do it. If they have somebody that's familiar with the data dictionary, they should be able to do it within, well, if they know what they're doing, they have an hour, I would guess.
In your company, how are you, all the data sets that you get, how do you typically get them?
Well, typically they're like a CSV file, a delimited file, sometimes Excel file in a true table format. Sometimes we get, for smaller files, we get maybe a text file or PDF. I don't like PDF as much.
Right. Yeah, and how many different clients are you working with?
Well, we do a lot of audits over the years. I mean, it's...
in any 1 year?
How many clients? Let's see, 30.
30. So are you then, when you're doing your data requests and what have you, with these 30 different clients, are you, year over year, you getting better in your exchange with them about, hey, here's what I want, this is what I'm looking for,
Oh, absolutely.
I want to test this. I want this. Are you?
Oh, absolutely.
Okay, so you're growing your request list.
Exactly. Because at the initial audit, I tell them, well, if you can provide this information electronically, going forward, it's going to save a lot of time, which is true. And we can do a lot of stuff remotely and save a lot of out-of-pocket, which is true, 100% true. So, yes, I have the initial audit is trying to get familiar with their books and records, but also selling them on needing information electronically. And people are getting better and better. So once we get that, like validating revenue, I mean, that's very, very useful. So I would say use it all the time. It only takes a few seconds. And, we get, if something jumps out, like if you're doing a new business, I would ask for maybe the last quarter or the last year. And they can provide agings very easily. It's an easy thing.
Yeah, I mean, typically they're paying for audits anyway. Some systems are good at producing historical end-of-year procedures, which is control you're seeing on ARA 1231. Typically.
Well, I mean, the way I view it, the more I think about it, it's really graphing data. So I know electrical engineers do stuff like that. Like if you have, well, not an electrical engineer, but anytime you get anything that's digitized data and you graph it, there'll be a unique pattern to it. So, and I guess the Benford is just one unique pattern. So.
It's a tool in the toolbox, right?
Exactly.
It's all done, but it's not that hammer.
Exactly. It's just right. And if something's, and not often, but every so often you'll get like a triangle, or somebody will only be using 2, 3, or 4 numbers, and then that's whoa, or that's.
Well, that's fun. When you see a triangle, you're like, all right.
Whoa, yeah, we got our work cut out for us, yes. Then it introduces a whole host of other issues, but that's.
So we, and Kevin, actually, for both of you all, do. How often do you get a data set that is completely missing a chunk? You know, like, for example, we did a data request one time where we're looking at tables, and somehow Gremlins ate the data all the way, you know, transfer, and we got A through B vendors, and E through C was completely missing. So, how often do you get something where there's like just a chunk of data missing where, you know, the bar might be, you know, nothing on the table?
I would say 90% of the time that's happened to me, it's usually been a bad limit, you know, where I mean, just because usually I'm involved in data requests, I'm very hands-on, because I'm
Typically pipe, right?
Yeah, well, pipe's the best, and the main reason is because the odds, you know, Joe Westford, right, we get typically use pipe, but again, you somehow get a description of the old comment. I was dealing with it just the other day, where I was dealing with a naming database, and I was doing something. It was I actually wrote a program to loop. It was a very interesting project we don't want to get into, but I had to do people's names, and it was like so-and-so D'Angelo. So now all of a sudden there's an apostrophe where there shouldn't be an apostrophe, and I actually wrote a program that was using, you know, that was using variables. It was actual program. But all I'm getting at is that I was in millions of records and I was losing a whole bunch of stuff, and it had to do with the delimiter, you know, and so you'll see that, you know, and again, with a million rows, you're like, you know, you're looking at what you're looking at, and you're like, well, what happened? And then you're like, where did everything go? And then all of a sudden, you know, and it was like at the end of the year, so it was like December, well, where is it going? Well, that's because it was for the most part, I've never really seen anybody try to hide anything. I will tell you though, and I don't know what you get with this, but I get real, you know, suspect when things take. Oh, sure.
When things what?
Things when the request takes.
Oh, absolutely, yes, that's a red flag.
A very long time where it's like, you know it should be very quick.
It's not
Yes.
hard. Yeah, right.
Yes.
And, you know,
Yep.
and then I offer my services.
Or
Yes.
our data system media or something like that.
Yeah,
Yes.
when you start seeing, when it takes a while and then you start seeing weird things, then all of a sudden you.
Yes. It increases yeah. If it takes too long for simple requests, the probability goes through the roof of there being a problem. Yeah.
Yeah, it's not that hard.
With exceptions, yes.
It just, I've had a couple of those. But no, I don't ever really see anything.
Well, I'd say with some clients, in general, yes.
Missing, the whole missing excluded deal. Everyone's pretty honest. We're usually, I mean, what I mean by that is that the request.
I worked with IT guys with some clients that I think they're playing with us. I think we concluded that we thought they were audit to audit. They'd copy and paste and some stuff would be missing, and this guy was really smart and knew his job. We kind of figured he was just playing with us, and I just look at the control totals. I look at the number of records. I can hear the number of records, and it were pretty much identical. So if suddenly I'm used to getting 100,000 records, and suddenly I get, and it's happened, 50,000 records, but sales haven't changed, assets haven't changed, the size.
That's another good, yeah.
Whoa, something's
I
wrong.
always look at control totals as the first step. I've never done a baseline, you know, like you're doing here.
But I'd say with any
system, like with you guys, you all do consistent audits year after year after year, you should have the data, right?
Yeah, I mean, usually we're getting it every way and trying to prove you know, I would just say, and this is more the case than anything, which is stuff going to the cloud and lack of resources inside organizations that they're using third-party. I was called like a golden age of technology, which was kind of in the late 90s, early 2000s, where all these systems, package software, or even large ERPs, they weren't developed enough to the point to give you everything that you needed from them. They weren't on a cloud, they weren't out somewhere. So they always would have data analysts, report writers, somebody who really knew these systems backwards and forwards, even at smaller companies, because they could get, what they needed to. And now the IT groups have gotten smaller, and the resources that are there to help you have gotten smaller. And what's left in a lot of these organizations is some knucklehead network admin computer guy who's like the Windows domain. I mean, basically the guy that just keeps the network up and running. And all the talent, all people that know what the hell's going on, don't work. They're in India, or they're a fractional resource because they're ungodly expensive. And because of that, people are stuck with what we have. Oh, I don't run this report. They got things they need to do day to day, and then when we come in with a third party on all requests, all of a sudden it's a problem. Oh, I got to spend $10,000 so I can get Sanjay to write a report for the auditor, and that's kind of what happens. And then you got to go, well, maybe you can just run a canned report and I can suck it into the idea. You start negotiating on all these things. But again, I mean, if the sheriff comes in town and you lay it down and you say, hey, this is how we're going to do it, you're going to get exactly what I want on the raw format. You're going to need to spend 10 grand on something. Because we're going to get exactly what we want to get. Then there we go. But, I think that's what's kind of happening. What's also happening is a lot of these softwares are getting to the point with APIs and the ability to get the data on the cloud. Everyone's realizing everybody wants to do a little bit of their own big data, or a big data package or the ability to take care of data.
You're right. Something I've noticed over the years, a lot of this, there's a psychological component. It's like, like the old junior auditor when I was starting out, can I see your general ledger? I've had a long time ago, what do you mean a general ledger? So if a lot of it is psychological, like if you say, well, this is what all the clients use, it'll try to sell them, saves me time, and I send them a list of the attributes I need, and I'll ask them questions, well, who, where does your data reside? What's your application software? So you're kind of boxing them in. So at some point they can't logically say, we don't know.
And that's what you just said is exactly what I do with people. Ask those questions. Where is it? Who's responsible for it? What software is it?
They've got to know this stuff.
And then when you finally figure out that the CFO doesn't know, the controller doesn't know, then you talk to your IT guy doesn't know, then you figure out, because the other thing is the technology guy, and these technology guys don't, it's hard to know everything, right? You only know what you know in your job. I mean, people that are really good at, people that are like rock stars tend to lead and go to better places, and so people left with talking to, finally figuring out you're dealing with this IT guy, and he snowed everybody think that he's Mr. Wonderful and knows everything about everything, and then all of a sudden you're asking for something real specific and you can't do it. And then the request takes longer, and it turns into this whole big thing, and then, I'm talking about, because everyone, IT guys tend to operate in kind of a distortion field sometimes.
And they're very protective.
And they're very protective because the way they are good at their jobs, that they're tinkerers and they figure stuff out. And they just don't want people to know that they don't know. So when we're really getting down, that's when they figure out that we know,
Yes.
and then the conversation, then we're going to basically say, you can't do this for us, so now we're going to find something you can. And it's just this weird deal. But I think what's happened with that has happened more because we talked about the report writers have left the building. You've given everybody whatever they've given them, or canned reports can work in systems or whatever. And when we get an oddball request, it just derails the status quo.
That's what's in.
A lot of people now outsourcing to the sun guards and stuff like that, and their IT groups, or is that?
I really see SunGuard as just a data center, just as a true data center. I mean, I'm just thinking about people that are using. I mean, everybody has a bar. Everybody has a reseller of some application that they're using. If I'm using whatever it is, I don't want to say QuickBooks, but if I'm using something random, it's a software, let's say I'm using Sage or whatever, you've got to get a meeting with your Sage guy, get that whole thing set up. And it's just depends. It really depends. But,
Well, that's what's amazing. I mean, to me, it's like with my company, just on the balance sheet, our data for data mining purposes is a I don't know what you'd value it at, $1 billion, I don't know, but it's not really valued on the balance sheet. And data is so important for running a company, but very often the people that run it, like you said, they have the data, but they don't know how to make use of it. If they had IDEA installed and they could run their own programs, and so that's one thing culturally I've noticed. We're to the point where we can do it, but it's so extremely valuable. I think Google and people like that know how to use it, but or probably Facebook. But most companies, we're not quite at that. It's so valuable. But
what happened? I mean, this is what did happen, and very quickly that the big companies did that, and I used to work at very large companies where basically you had SWAT teams of IT people that could do whatever, and that's where I learned everything I learned. And basically, they had all the money and all the resources. They would put it in Oracle or SAP or whatever it was, and that was just put it in a monster system, and then you spend tons of resources producing reports for every business division, or put it in a data warehouse with data. This is 15, 20 years ago, so that the people could be better at their jobs. The analysts wouldn't even log into the systems. They would use report writers or data warehouses or multi-dimensional modeling tools that would allow them cubes and drilling and all the stuff that we're doing here to get what they needed. And I've seen this time and time again from clients that are $10, $20 million, $100 million, $40 million, $400 million. That the CFO or controller can use basic account reports, build the financial reports, do the things they need to do, but there's all this other data in there, and they haven't really said, you know what, we should spend just as much money on a report writing system and go to every group and say, how can I give you data that's going to help you better run your business? And the new term of what this is called is big data. It's just marketing. It's like the same thing with cloud. Everyone's like, what the hell's a cloud? Well, it's the same thing. The cloud was always the cloud. The cloud was always a computer somewhere. Let's just call it cloud now, or a computer somewhere else. Okay, well, it's a cloud. It was, everybody was still doing stuff. Call it mainframe, you call it whatever you want to call it, but it's just servers somewhere. Same thing with big data. It's just writing reports against your data. It's really all it is.
People were actually doing that in the 70s.
Yeah, people have been doing it all the time. You've heard me say before, is that we had a client that was in a retail electricity company that I know half you guys have probably used, or at one time you changed your electricity to your down. And they were, a pretty large company, and they were running their financials off QuickBooks. This was pretty straightforward. They had all their billing and all their billing engines and what have you in an Oracle database, but they had a QuickBooks financial system because it really wasn't. They would put summary journals to QuickBooks, and it could all tie out. No big deal. But they wanted Oracle, so they go off and spent $1 million on Oracle financials, Oracle financial package, and an Oracle billing system. It was really just a set of electric houses for meter reads. They would do that, and they put this financial system from Oracle, $1 million, but they used it just like they used QuickBooks. So I basically looked, when we talk about it all the time, so you've got $1 million QuickBooks because she's thinking of doing it different than what QuickBooks did before. The goal of getting to a really good financial system, ERP, whatever you want to call it, is the ability to tap into it, get a lot of information. And if you bet the hell you can start QuickBooks too. But it's just a matter of put in a system and then report, get a good reporting system on it, get a good warehousing, they call them smart views, or the ability to get queues, the ability to get reporting out of it, good reporting.
And that's where we seem to be stuck as a business culture, because when if you guys end up owning companies, just your data is so valuable. You can do so much with it. You can do your own internal audits. You can use it for marketing purposes, and there's so much value. But you have some IT people that don't understand accounting, and you have some smart guys that running the business, but they're not IT people. So no, there's no one.
Yeah, there's that middle ground, because the people that are technologically astute and also understand business tend to not, tend to get highly paid and work work on bigger problems. And so that lower group that basically they just need to go buy some camera boards. They just need to be like, oh, I bought this, and then I need to go spend another $2,000 buying the best thing I can hook against my software, right? Meaning I'm going to go off and buy Crystal reports or AppHack or whatever your crazy accounting program is, because if I'm not harnessing or leveraging my ability to tap into my system. And, you know, and the question is this: first order business, try to get one on the street if you don't have a big IT department. If you do have an IT department, get them involved and they can help implement it. But you know, you may just be stuck with this is what I'm using, so let's go buy something else expensive. Let's go, you know, I'm using a financial system called Hack or whatever it is. This guy makes it for you. There's somebody out there who's built some really slick thing that can hook into it to get the data out.
And maybe the millennials, when they get to the point they start owning and running the companies, they'll say, oh, we'll start data mining. But current group is still, you have a very lot of smart people and technical people, but you know, it just seems like there's a business model in there, because once stuff is in a data form, I mean, there's just no end to
what they get with cloud helps too, because now you're an application or application there, then it's you're not fighting. They're going to want to find a way to get another revenue stream for you, and that's going to be providing the ability to tackle data. And then what we have to work as auditors is be able to get our ability to get raw data out of them through an API or something.
Like y'all could do, like for, I don't know, if you could contract with your clients, you could do a lot of internal audit through, the Benford is just the tip of the iceberg. You create your own graphs. But once you get the data, you can write, like within IDEA, you can write. We have some ongoing projects. There's two ways to write the scripts, the macros. And one's real easy, just memorize its keystrokes. I mean, there's so much you could do, I would think, remotely for your.
Oh, yeah, legit data. I mean,
that's just it, talking them into the data. But it takes practice. But once they start getting used to giving you the data, then it's like anything else. It becomes just you condition them to give you the data. Excuse me. So from a users group, is there anything you all think we should maybe talk to automation about? What do you think about the crowdsourcing approach? So I've noticed from...
I think there's something, though, and we were, correct me if I'm wrong, but the version, is it there's some kind of... There's version 10, and
yeah.
I think version 10 is better when you log in. I haven't installed it yet.
Well...
But there's something where like you log in and there's some kind of idea, yeah, right. The idea network, right? Idea dashboard, right? Passport, and that's kind of a forum. There's a forum.
There's a forum. There's videos and this.
Well, that's one of the things we wanted to show you. It's my second time with using GoToMeeting. It's very useful. But,
Lee, if you'd like to transition to Scott's presentation now, we can do so.
Yeah, I was about to say, like.
I hear him talking.
Would you like to transition to Scott's V10 presentation?
Oh, yes. Please, Kelly.
Okay.
Maybe.
Hey, Lee, can you hear me?
Scott, yes. I'm using the speaker on my laptop.
So now the screen's going to cast.
All right. Are you guys seeing a different screen now? Looks like my IDEA instance?
Yes. Perfect.
All right, guys. So if you have questions, I was barely able to hear what was being said back in the background. So if there's questions, please move up a little closer to wherever the microphone is located, if you would, please.
You don't want to get closer. Unfortunately, we're using my laptop. Next time, if we do this, I'll bring speakers or something. But
do you have a telephone in the room with a
yes.
speaker?
Yes, we could try that.
If you do, you can just look at the phone number, dial in, and put in the code, and then you can put it on conference call, and everybody can hear.
Do you have? Oh, okay. Let me see.
On the screen, on the little GoToMeeting app or GoToWebinar app, there's in the audio section it says telephone or mic and speakers.
Oh, bear with me, please. I'm looking. Let's see.
Okay.
Oh, you do? Oh, Dana's here. She said if you can give her the phone number and access code. I'm looking for it. It's my fault. I can't find it here.
The phone number is 631.
Wait, let's see. 631
992
992
3221.
Oh, it's a Pasadena number.
And then the access code is 9.
Oh wait.
Or excuse me.
Oh wait, not yet.
Please enter your access code followed by the pound or hash sign.
Oh, wait.
And
Okay,
Lee,
Scott.
you're gonna have to switch it off of mic and speakers, or it's gonna be feedback really bad. Okay.
Okay. As soon as you give me the access code, then I'll switch it off.
It's 837 593.
837.
Yep. 599
Okay.
300.
Please enter your audio pin.
Okay, hold on one second.
Hash sign. If you do not have a pin, just press pound or hash.
Let me see. That's like the soundtrack. That's like the soundtrack from the Burton of the Hell.
Okay. Are you? I think you're on the phone now. Are you hearing me?
I can hear. I'm getting distortion. Let's see. Kevin just stepped. Oh, you may want to come over here to. So, oh, you wanna?
What's the phone number?
The phone number is 631 992 3221.
What's the access code?
837.
837.
Yep. 599. 300.
So, okay,
Good to go?
it's a little better. Okay, Scott, you're good to go.
All right. Sounds good. Sounds good. All right, guys. Well, one request. If you have a question, get up close to the phone, or I probably won't be able to hear or understand what you say. But I do appreciate you giving me a few minutes just to go over very briefly what Idea 10 has incorporated. And if you have questions, feel free to shout them out, okay? So from version 9 to version 10, the look and the feel changed very, very, marginally, okay? They kind of flattened out the buttons. They made it look a little bit more like the typical Windows 10 implementation that you're going to see for your desktop software. Other than that, it's all under the hood. The stuff that you're not going to see is the biggest changes. And we're going to jump right in since all of you are very accomplished users of IDEA. Where you're going to see the changes are over here on the Home tab. there's a little button that says Passport. All right, now I'm not going to actually log into the Passport, but I'm going to show you what it looks like. It's in essence a dashboard that has a lot of resources accumulated in one place. So when you do your email, your install key, you log in with a valid IDEA user license and whatnot, you're going to get access to a bunch of resources that are hosted either in caseware or automation, or be able to access those resources to be able to kind of make your experience with IDEA a little bit easier. The marketplace applications, custom function library, a bunch of documentation and helpful videos, as well as IDEA scripts. Stuff, people like yourself that are creating scripts to solve issues, solve problems, help things be easier. They can be put up into a script vault so you can download them, check them out. They're all categorized. It's very easy. And then there's forums and portal support. Obviously, there's a blank spot here. So Lee has thrown out a few suggestions. We're going to take that and move it up the food chain. And if there's enough interest in it, it could be implemented. I'm not saying it will, but it could be. So a good spot to kind of put all of the resources, or a lot of the resources that you'll need to help make your experience with IDEA a little bit more easy and a little bit more useful. All right, so let's go back to the Home tab over here. And you can see I've got a few data sets imported into IDEA, very generic data sets, and I'm going to use those to demonstrate a couple of the features that have been implemented in version 10. First thing we're going to do, jump over here to the Analysis tab. Okay, all of the usual stuff is still here. The extractions, the Benfords, the statistics, summarizing, aging, stratifying, pivot tables or crosstabs, joining, comparing, huge amount of sampling is available. But now you notice down here there's two buttons. One's called Discover, one's called Visualize. These are dashboards that you can set up. We're not trying to take the place of the big guys like the Click Views or any of the other dashboarding and visualization tools. Not our place. We're not trying to do that. But what we are trying to do is allow you to get a very graphical user interface view of your data to make your case. Okay? What it's basically taking advantage of is a lot of the statistics that are available just by clicking Fill Statistics, but putting it into a graphic interface. Let me go ahead and clear out this criteria that I had placed on my data set. All right, so we've got Discover, we've got Visualize, graphical displays of the data, and you're all familiar with the duplicate key detection and exclusion that's in standard IDEA. Let me open up this, and I'm going to show you a little demo using some employee information. All right, close this guy out to begin with. All I did was import about almost 1,000 rows of employee information. Now on the duplicate key category here, there's a new option. It's called Fuzzy Duplicate Key Detection. Uses Levenstein calculation techniques to do similarity checks between key values. It's not the end-all, the be-all, but it's pretty darn cool, and they made it easy. So click on Fuzzy Duplicate Key Detection and answer a few dialog box options. I'm going to output the fuzzy matches, records without fuzzy match, or all records. So play with this. When you get IDEA 10, play with it and see how it works. You can have all records with fuzzy duplicates and make groups out of it. That's what I'm going to do. I'm going to have it make a group. So in essence, what it's going to do is going to let me choose a key from my data records. Okay, the key can be up to 3 columns. That's it. You only get up to 3. So for simplicity, I'm going to choose the employee address, and let's see the last name. Okay, so based on this key right here, I could choose one more. I'm just going to choose 2. Now, a way around the 3 key or 3 column hard limit is to combine columns together. I can make the address and the zip code and the city one column, and then it'll become part of the list, and I can use that as a much more robust key. So for now, employee address and last name. Click OK, and then there's a slider. This is the degree of similarity is how much emphasis the Levenstein calculation is going to put on that key to say this row of data is similar to this row of data, and then the next row and the next row. What it's going to do is it's going to take the employee address and the last name, make it into a key value, and then check it against every other record in the data set. So let's call it fuzzy duplicates. Let's see, employee address and last name, 80%. I'm using 80%. It's just the default. Okay, so I'm going to create me a new database. When I click OK, it's going to walk through my data. Now you notice group name. That's my key. That's the employee address and the last name, and it goes, how many times was there something similar to that exact record? I've got 100% match there. That's the same key. That's a group. Okay, that's a group. Okay, if you scroll across, you'll see what the differences are. So if I choose that second group right there, we'll see the difference is there's 2 first names at that address with the same last name. No big deal. But you can use this to dig down a little bit deeper. Let's go down here, group number 12. That's the key. We got an exact match on the key, but somewhere in the record, there's a little bit of difference. If we go and we look at it right there, the employee address, okay, we got a data entry error. Or is this something a little bit different? Did they do that on purpose? So you can start interrogating your data based on the similarity and how much emphasis you want to put on that similarity by using that slider to go left and right. Okay, is there any questions? Dana, are you seeing hands come up? Is there anything that I need to address on this? You can unmute yourself and let me know. Okay, somebody has
nobody has any questions here.
Okay, they need somebody. All I got to do is take it off of the microphone and speakers and put it on telephone, and all of that feedback will go away. So no questions. We're going to move forward. Okay. I'm going to close out this data set, and now I'm going to open up. You can see I call it the Texas Payments Records. It's made up information, purely fabricated. Vendor number, payee, invoice, invoice date, amounts, authorization, check note, check number, check date. What I did was, for this full record set, is I did a quick extraction and I made 2 time periods, January to June, July to December. Okay, so if I pull my full record set open, my Texas payments, the full year, look at the field stats, look at the date range, you can see I go from January to basically the end of December, pretty darn close. If I open up these, I just did a simple extract, less than this date, greater than that date, to put it into 2 time periods for demo purposes. Let me go back to the data. Now we're going to jump right over to the Discover tab. The Discover tab will create a dashboard with graphics for me. The cool thing about it is it uses some calculations called interquartile statistical analysis to basically look at the data, determine the types of data by column names, and provide graphs. So let's go ahead and do that. I click the button. IDEA hands off to this new analytics engine. It's going to open on a second screen, so give me a second here to let it finish its analysis, and then I'll drag it back over and we can see what it looks like. So this is what it did. It took a lot of the statistics and put them into simple little blocks up at the top of the screen. And then it made charts out of other certain statistical information within the data set. This is the Discover's interpretation of what's important, okay? If it's not, let's change it. So say I want to see this is Texas Payments Database. That's the one I had open. It's a sum of the amounts and count by records by authorizer. This is called a tree view or a heat map, so to speak. Not your classic heat map, but we call it a tree view. And you notice it goes from blue to purple to red. the calculation has determined that there's something based on the sum of the amount within the data set and the number of records by authorizer. That's an issue that needs to be looked at. So if I put my mouse over it, it'll show me. There's 296 records, but it's over $10 million worth of value. Is that an issue? That's a good place for you guys to start. Start looking at your data. Okay, go down here onto this guy. There's 8 records for 670,000. The algorithm determined that that's not quite as much of an issue. What if we want to change this? Change the characteristics of the heat map. Maybe change a different chart type. Up here on the button, there's properties for the charts. You can copy this chart to a clipboard, put it in a Word document or Excel file if you'd like to. You can go over here and look at all of the data underneath, or you can maximize it and see just one chart in the full screen. So what I'm going to do is I'm going to click on the properties. It's going to bring up the utility to let me modify my chart if I want to. So say if we wanted to take this on the accounts payable, or excuse me, Texas Payments database, instead of grouping by authorizer, let's group it by vendor. And it'll reformat my graph for me, change the characteristics. So instead of coloring it by sum, let's go ahead and do the count and save it as a new chart. So now I've just changed characteristics. I can make it how I want. Whatever is important to me, it can put it in there. Each one of these, amount, net value. If I don't really want that statistic up in here, or I don't want the zero amounts, or I don't want the average amount, let's go ahead and click on the little star and then choose the stat that you want to include into your view. Okay, so let's see. We've already got net value. We can choose all of those characteristics. Or I can change to a different one of the fields and then choose the characteristics for that particular. So let's see, items in March. That's what I'm interested in. It's going to update my view to show the characteristic that I want, all in a nice dashboard. Now, after I've got this dashboard all tweaked the way that I like it, I simply save it, okay? Saving it makes a visualization dashboard, puts it in my library, so I can just, next time I get this data set, I can open it up. It'll create the dashboard for me. All right. Any questions on the discover part of the visualization? Dana? Anybody? I don't see any heads shaking or hear any heads shaking.
I think you're good, Scott.
Pardon me?
I think you're good.
So she had like.
Okay, very good. So what I'm going to do is I'm just going to close it, okay? And it's going to bring me back into my full view of IDEA. Now, you realize I had the Texas Payments, the full population open when I clicked Discover. Discover works on the record set that you have open when you click the button, okay? It's a single record set overview of the data. Now, if you wanted to do, you notice I've got 2 time periods here. Maybe I want to do comparisons between the two. Just kind of see, okay, for the first half of the year, I'm trending this way. For the second half of the year, I'm trending that way. So let's go over to Visualize. Visualize is the freeform dashboard creation tool. And it's going to open on my second screen after it interrogates the data a little bit. And this is the dialog. I'm going to create a new dashboard. Okay? First thing it tells you to do is choose a chart for your first visual. I'm going to do a simple column chart. For the database, I get to choose. I'm going to do the January to June invoices. And now, how do you want the chart set up? So we're going to group this by vendor, and we're going to sum the amount, and it gives us a simple chart based on sum of amount by vendor for the first half of the year. So if we save that guy, the next thing it's going to do is say, okay, how do you want to set this up? You want 1, you want 2, you want 3, or do you want 4 charts? Just for grins, let's choose 4 and click select. And on my other screen, it starts building a graph for me. Okay, so there's my first half of the year. Second thing we want to do, let's add a stat in here or a statistic. Okay, click the little button, and with a Texas, no, I don't want that. I want to actually have multiple stats for the same database. So January to June invoices. What field do I want? I want invoice amount, and I want the net value. Okay, so my chart and my data associated with the chart. For this guy right here, let's choose another database because I want to do side-by-side comparison. So click on this guy, and July through December. Field to choose, we're going to do amount, and we're going to do net value. Pretty darn close. You're quarter over quarter. Now let's add the same chart to this data set so we can do it side by side. I hope you're getting the feel here. The next chart we're going to do, bar chart, column chart, excuse me. The data set is going to be the second period that I'm interested in. Vendor, sum by amount, save, and now I got side-by-side comparison. You see how we're doing this here is I can have a visual that's important to me. When I've got all of my panels fleshed out the way that I like it, I'm simply going to save this guy, and I'll call it, let's see. You notice where it's saving it, the visualization folder in my project. You'll see it down here in the library, okay? So it'll just be Scott-test, hit save. All right, so we've got this thing all finished. It's all cleaned up. I've got all the panels populated. Close it out. Now let's go back here to the library. And there it is. It's sitting there. So I get my next Texas payments, and I split it into the two data sets that it uses to populate. Do a simple criteria on it. I go over here and I double click on it. It's going to read the data from the database, make the same graphs with the next period's data, and let me drag it over here. So it becomes a resource that you can share with people because it's just a file. If you notice, let me close it out. It just has an .idash extension. So that's just a file that I can copy, send it to my colleagues, put it in a library, use it time and time again. Not trying to, corner the market on visualizations, but as far as having a single point of entry for being able to look at your data, analyze your data, look at statistics about your data, and get some they're very good graphical views of how data lays out within the data set. Open up the dashboard, and then you can play with it. There's a bunch of different chart types. I do want to point that out. If you look at it, and I click on the button here, let's see, the chart types, we've got column, bar, line, pie, scatter, and the tree or heat map that you can put into effect. Let's change that one to a line, hit save, and now I've got a completely different view of the data. All right, any questions? Lee or Dana, if you can unmute yourself. That's the bulk of what I wanted to get across for the version 10 updates or differences.
Does anybody have any questions here? We're good here, Scott.
You're good to go? Well, that's it.
Yeah.
Dana has my phone number, my email address. Anybody that was up there, if you want to ping me and pose some questions after you get back to the office, feel free to do so. I'm always available to answer questions, jump on the phone, get online, and go a little bit further under the hood if you need to. If not, that's all I wanted to show you for the version 10.
Okay, thanks, Scott.
All right, guys, you have a great day. I'm going to log out and get to the next presentation. So I look forward to talking to anybody in the audience there, okay?
Thank you, Scott.
All right, thanks.
All right, guys. Have a good day. Bye-bye
Bye.
now.